Dive into a topic that I know drives traders absolutely crazy: stop-loss hunting. Seriously, understanding this one thing can completely flip how you look at the charts. So let me ask you a question, and be honest. Have you ever been in that perfect trade, you're feeling good about it, and then you watch the price just dip, just enough to tag your stop loss, and then boom, it immediately reverses and screams towards your original target without you? It's got to be one of the most maddening feelings in trading, right?
Well, I'm here to tell you something. That little dip, that perfectly timed stop out, it's probably not just bad luck. And it's definitely not a coincidence. More often than not, it's a calculated move. It's designed to do exactly that.
So to really understand why this is happening, we need to talk about the market's hidden fuel source. It all boils down to one single critical concept that the big institutions are always on the hunt for.
And that concept is liquidity. You can just think of it as the lifeblood of the market. See, the really big players, what we call smart money, they need to fill gigantic orders, and they can't do that without causing a massive price spike or crash, unless they can find a big pool of opposite orders. And guess where they find a predictable, concentrated pool of orders just waiting to be triggered? Yep, your stop losses.
Now, what's really cool is how this breaks down. It's not just one big, messy pool of orders. You've got two types. When short sellers put their stops above a recent high, they're creating buy-side liquidity. And when long traders, which is most of us, place our stops just below a recent low, that's called sell-side liquidity. Both of these are like giant neon signs pointing to where the orders are, making them easy targets for smart money.
So, how in the world do they actually pull it off? Let's get into the nitty-gritty and break down the anatomy of a stop hunt, because it's not random, it's a very specific process, a trap that gets set and sprung with surgical precision.
And this trap has a name. The technical term is inducement, and it's exactly what it sounds like. The goal is to induce you, to lure you into feeling safe, getting you to place your stops in all the obvious spots, and then they use those very stops to fill their own orders. And this lays out the 5-step playbook perfectly. First, we, the retail traders, put our stops at really obvious support or resistance levels. Smart money knows exactly where those are. So step 2, they intentionally push the price right into that zone. Step 3, that triggers a whole cascade of our stop orders, creating that huge wave of selling they need. Step 4, they just sit there and absorb it all, filling their massive buy orders at a great price. And finally, step 5, once their bags are full, the price violently reverses, leaving everyone else stuck and confused.
Okay, I know. That sounds kind of grim. But here's the really good news. Once you understand the game, you can stop playing it. You can learn to avoid the traps. It's time to start trading like the hunter and not the hunted.
And here are 4 golden rules to help you do just that. Number 1, stop putting your stops in the most obvious places. Give your trade some actual room to breathe. 2, be patient. Don't chase a breakout. That's a classic trap. Wait for a retrace or some real confirmation. 3, place your stop based on your actual trade idea, where your strategy is truly proven wrong. And 4, and this is huge, start seeing these stop hunts for what they are. It's not just a loss, it's a giant signal that smart money just showed you their hand.
I absolutely love this quote because it reframes the whole thing. It's not about you being a victim. The algorithms aren't out to get you personally. They're just playing a very logical game. So if you get smarter, if you trade with structure and logic, you can make yourself a much, much harder target.
So I'll just leave you with this one question. After all this, take a hard look at your own trading strategy. Are you placing your trades with precision, thinking ahead like a sniper? Or are you just placing predictable stops and, well, becoming the bait? The choice, my friend, is yours.